With so much uncertainty in the market, with economic forces that we can't control happening, interest rates, stock sell-offs, when there is fear in a market, there's also opportunity. And opportunity presents itself in great ways. And so I wanted to bring on today Paul Norman, our tried, true, and trusted lending partner with CrossCountry Mortgage. And we're going to just have an organic conversation about what is happening today, April 7th. We just both figured out what day it is because we've been so busy. We don't even know. But there's a lot of economic news this morning that was talking about a prediction of a Black Monday. And, what does all of that mean? I want to kind of boil this down for those of you who are watching about what impact this is going to have on real estate, specifically in the Triangle.
So the last really 3 days have been just a roller coaster ride in the market. Mm-hmm. We've seen a huge sell-off from a stock perspective. The bond market started to rally a little bit. We saw yields getting pushed lower to really a big resistance point in our world. Mm-hmm. And we saw mortgage rates really start to turn positively for home buyers. The interesting thing, though, is, we don't know exactly how long this window will last, if it will last. And it's just such a volatile process right now as the whole entire world is looking on the U.S. and trying to navigate this new trade war. Mm-hmm. And so from a home buyer perspective, in our market especially, where we've seen so much pent-up demand, mm-hmm. and we've seen so much pent-up demand really from what's called the interest rate lock effect. So many buyers have interest rates that are so low and they want to move and haven't felt like they really could move because they have mm-hmm. such a great rate. So if rates start coming down, ideally we'll see more inventory, we'll see more opportunity for buyers to find their dream home, but also more competition.
Mm-hmm. I agree with that. So let's break this down a little bit. How does the 10-year Treasury affect mortgage rates?
So that 10-year Treasury, so mortgage rates are directly correlated to the bond market. Mm-hmm. And so what we see is when that yield starts to drive lower, mortgage rates tend to follow that. Mm-hmm. And it's almost a direct correlation. Mm-hmm. So when we're watching that bond market to kind of see what's going to happen with rates, anytime there's bad news in the stock market, that's typically a good thing for mortgage rates. Mm-hmm. And that's what we've seen over the last couple of days, that we have this huge sell-off. Investors are then going to the bond market instead of mm-hmm. riskier stocks and things like that.
Mm-hmm. Yeah, so at this moment, the Dow Jones is down 729. It's a pretty big sell-off, considering what happened last week as well. And I think we gained a little bit back Friday of last week, right?
Yep.
So when it comes to, we did see rates pop down a little bit on Thursday and Friday. And you told me a couple of stories about jumbo loans, and I specifically want to talk about jumbos. Jumbos are
anything above the conforming limit. So right now, really anything above $806,000 is going to be considered a jumbo.
So if you're borrowing over $806,000 for a home, you have a window. Yes. You locked two rates Friday at what?
Yep. So one was an ARM at 5.5%, mm-hmm. and the other one was a fixed with no points at 6 1/8. Mm. And so we're seeing really, really competitive pricing in the jumbo space because the conforming loans, so Fannie Mae, Freddie, really haven't adjusted the same way as that market has. Mm-hmm. The other big swing that we saw over the week were government loans. So anything FHA, VA, USDA, those rates have been very, very low considering where we were at the beginning of the year.
So I think that in itself provides an opportunity. And in order to kind of help fill this picture a little bit, I want to talk, because Paul and I have been together for about 6 or 7 years now. We don't even know what day it is. We can't keep up with how long we've known each other and been working together. But we've worked with a lot of clients together, and we've been through a couple of key things. We went through COVID together, and we went through the bank collapses, the Silicon Valley Bank collapse together. And those things had a significant impact on the market. And so when we're looking at what does the future hold, we want to kind of take it back a couple of steps and talk about, okay, what did we see at the beginning of COVID? So at the beginning of COVID, when nobody knew what was going on, rates actually spiked.
Yep.
Remember that?
Yep, they spiked, and a lot of lenders completely halted funding.
They wouldn't even give a loan because they didn't know what was going to happen.
And that kind of feels the way we are right now, just from a market overreaction, just no one really understanding what this trade war is going to entail, how long it will last, is it real? Is it fabricated? What's kind of the end goal behind it? There's so much misinformation out there that it's really hard to project and to gauge, right? But what we do know is that the folks that bought on that, right when the market started to shift, right when that cycle started to begin, when the people that bought in that beginning part of the cycle really, really benefited the most.
And they benefited because at the beginning of COVID, prices hadn't gone up yet.
Yep.
The market didn't know what was happening. So prices were still low. Rates were a little bit higher than they were at their lowest. But you were able to get a great house at a great price and a great interest rate that you could refinance.
Exactly.
And a lot of those people ended up refinancing from 4.5 or 5 down to
sub 3%. And the other thing like, we haven't really touched on yet is just how this will affect builders' construction costs and everything else.
So when it comes to what happened, the people who benefited in the beginning, they were able to get houses at prices before that massive appreciation. And we saw like 46% appreciation in the triangle. So the people that acted first might have paid a little bit of a higher rate. They didn't get those 3s initially, but they got a great price on a house and they refinanced, right?
Yep. And a lot of those people, ended up selling down the road, right? And really reaping the benefit and then parlaying that purchase into, their new dream home, whatever it might be.
For sure. And then during the Silicon Valley bank collapse, we saw the same thing. We saw a lot of uncertainty in the market, and the people who were sitting on the sidelines ready to buy were able to seize that opportunity and get a great rate and a great price on a house, right?
Yeah, I mean, that was really one of those windows over the last, 2-3 years where rates dipped and a lot of people were able to capitalize on it. The folks that I feel really bad for are all the ones that thought rates would continue to go lower. And so I think that's the key takeaway. What we've learned from these massive swings over the last couple of years is there's really no guarantee that we're going to get lower.
No.
And so, this could be kind of the floor of where we're at, and that's okay. But, we're able to take advantage of these small little windows. So for buyers out there, what's important is obviously have your pre-approval ready, have your priority list, with your partner, understanding exactly what areas I want to be in, what price point I want to be in, what kind of house I want. So when that house does come up, you're not chasing a mortgage rate.
Yeah, exactly. I think chasing a rate is something that I fight a battle with a lot, especially with younger buyers because they're conditioned to this 3% rate. Here's the deal. When rates are low, the economy is not thriving.
Yeah.
When rates are low, the economy is bad. So we have people who I work with who they were waiting on this lower rate. Well, okay, the lower rate is here. There's an opportunity, but then they're like, well, but there's uncertainty in the market. And I totally understand that there is, but we have to really look at what is your job? What kind of role are you in, and how does what is happening have an effect? Because it's not going to affect everyone. Some people are locked and loaded in their jobs. They're not going anywhere. Some people may not be as confident. So really having someone that you trust to talk through all of this with is really important. And I want to just kind of jump into tariffs. So when it comes to the Raleigh market does not operate the same way that the national market does. No. In the past 4 recessions, the Raleigh market or the past 4 corrections, let me say, the Raleigh market has thrived, right? Like, did we go down a little bit? Especially in 2008, we went down a bit, but we come right back out of that roaring. When other markets like San Francisco, Austin, New York City, when those markets start to fall, we stay really steady, right? We correct a little, but we don't have those massive swings because we also don't have those massive appreciations.
Well, the big thing too, if you go even back to 2008 and just saw, we dipped and then kind of plateaued throughout that crisis, but it's a huge testament to how healthy our labor market is.
Yeah. And our university systems.
Well, it's so diverse, right? Even if you look at the way we came out of that as opposed to Charlotte. Charlotte got hit a lot worse because their economy is really heavy on the banking side. Whereas if you take a step back and look at the triangle, we have the university systems, we have RTP, obviously. We have the hospital system. So many different people are moving here in so many vast different industries. And the other thing is how many remote workers we've attracted just by being an amazing place to live. And so that diversity from a job and labor market perspective is what keeps us insulated, I think, in a little bit of a bubble.
I agree with you 100%. So let's talk about how tariffs could have a potential impact on new construction, because that those costs will get passed on if they linger, right? If where we are today stays, home buyers in the future definitely will pay a higher price. Would you agree with that?
Yep. And I think a common misconception with new construction is that, if let's just, for easy math, say the house is priced at $1 million, it means the builder is walking away with this huge
Chunk of change,
sack of money.
which is not the case.
No, I mean, builders have really seen margins get compressed and compressed and compressed throughout COVID and coming out of COVID.
Yeah.
And so, even though we saw materials get cheaper and that, supply chain start to stabilize, then what happened is no one could find labor.
Yeah.
And so we've been kind of battling this, right? And so I think when we look at the tariffs, builders are going to be shy because a lot of them lost a lot of money not having
In
things
COVID.
like during COVID, not having, material cost escalation.
Adjusted correctly, yeah.
And everything else. So they're going to be gun shy with
Yeah.
pricing. And that's just the nature of it. So we're going to see prices of homes just organically go up.
Yeah. So let's talk about two separate things, because I want to tie it all back together. Number one, there's inventory in the market right now, right?
Yep.
There are builders who are building houses. There are resale houses that are on the market, especially in that $1 million and over price point, that there are massive opportunities in right now. So if you're a buyer and you're out there and you're like, I've been waiting on this or waiting on that, but I feel really secure, there's an opportunity here to buy inventory in progress from builders, to buy homes that are on the market for resale, and to be able to finance, if you're going to use financing, in a jumbo rate that gets you close to 5.
Yeah, I mean, it's pretty incredible.
Or
really.
in the 5, sorry, close to in the 5s, not 5-0, like 5-9.
But if you just take a step back for a quick second, just see how far we've come from a rate perspective since like October, November. So Gretchen, you've heard me say this 1,000 times, but rates go up like an elevator, they go down like stairs. And that seems to be kind of the cycle that we're in. But I mean, rates were as high as, 7 1/8, 7 1/4 right after the election. And we've seen a good amount of correction. For some buyers, it still may not feel like enough. But for me, doing this every day, it has been an incredible 2025 from a rate perspective.
I agree 100%. And I think that's where, to tie it all together, when there is uncertainty and fear in the market, there is opportunity.
Yeah.
Don't ever forget that. And I do think there is a window of opportunity here in our market that is, you've heard all the reasons. We're economically stable. We're diverse in our economy. People want to move here. We're still very affordable. I feel like this is a great opportunity for you to be able to find a home that works for you and your family, and be able to, land that without this escalation of costs that we're going to see in the market, and still be able to get a great rate.
Yeah, I mean, I think we're really blessed to do what we do in the Triangle. I really do think we're one of the top 5, if not the top.
Oh, we're the top market. What are you talking about? We're number one.
I like to be a little bit. I like to be a little bit humble.
I don't care what anybody else says. We are the best market in the country.
But I do feel like, when you really take a step back, what I urge people that are following the tariffs, following just kind of the uncertainty that is our world today, to get, like you said, get super granular with it. Focus on you as an individual. How do I feel about my job? How do I feel about the company I work for? How do I feel about, my raise that I thought I was going to get, or bonuses, commission, and really focus on that aspect of it, as opposed to the doom and gloom. A recession means I shouldn't buy a house, because this isn't going to be a housing recession.
No, this is not going to be a housing recession, not in Raleigh. And I don't even know if it's going to be a recession. Like, we just don't know. There's so much going on, but there's always uncertainty in the market. And when there is uncertainty, what you really need is incredible advice. You need advice that is not motivated by our goals, dreams, and desires, but is motivated by your goals, dreams, and desires. So if you're listening to this and you're kind of plotting it all out, give us a call. I'll link all of our information below. Paul is like, his dad was a mortgage originator.
It's in the blood.
It's in his DNA. And, real estate is obviously in ours. And listen, we don't have a dog in this fight. We want you to make the best decision for yourself. We don't care if you choose to buy today or you choose to buy 10 years, because neither one of us are going anywhere. And what we want to do is be able to help you work through things that you're thinking about and talking about at a very, not at a high level, but at a level that is for you.
Yeah, I think that's the really key thing, is just understanding the value of home ownership, what it brings to a family from a stability standpoint, and just being able to make that decision without having all of the outside noise around you, because more so than ever in our world, we're surrounded by so much outside noise.
Totally.
And it's tough to space it out.
Well, I hope you guys enjoyed this conversation. Paul, thank you so much for
Thank you,
joining
Gretchen.
me. Always insightful, and we will see you here in Raleigh at the Coley Group. Thanks.